Welcome to the Fear and Greed Afternoon Market Report for Tuesday, the 18th of May, 2021. Where in just a few minutes, I'll tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. The S&P ASX 200 rose 0.6% today to close at 7,066 points, making it 3 sessions in a row of positive returns. Energy stocks and materials companies led the way, while real estate and industrial stocks were the worst performers. There were some significant moves among the big stocks. The 3 large miners, BHP, Fortescue Metals and Rio Tinto, all rose around 2%. National Australia Bank, ANZ and Telstra were all up more than 1%. Aristocrat Leisure continued its incredible run over the past few sessions. It ended the day 3.5% higher after yesterday's 9% jump. Embattled Group Nui's share price jumped 11.5% after the company management came out and pretty much did a mea culpa about recent turmoil in the data management group. The organisation, which listed late last year and has fallen more than 50% in 6 months, was the subject of an investigative report by 9 entertainment newspapers, which raised questions over governance. Chief Executive Rod Vaudrey said he took full responsibility for the performance of the business and apologised to shareholders. Other strong performers today included lithium miner Pilbara Minerals, up almost 8%, and gold miner Chalice Mining, which finished 7.6% higher. Gold explorer and producer St Barbara's share price tumbled 9% after it downgraded its production guidance for the current financial year. A big part of the problem is it can't find workers, and particularly skilled workers. The labour shortage in Western Australia, where it's worse, could cost the company around $60 million this year. And all this comes as the price of gold pushed to a 4-month high of around $1,870 an ounce. This is when St Barbara should be making money. James Hardie reported a 9% jump in net profit for the full year to the end of March on 12% higher net sales. The building materials group, which has huge operations in the US, will start paying dividends again next fiscal year. All that's good news. But Chief Executive Jack Truong said inflationary pressures were rising, with higher pulp, pallet and freight costs causing challenges. The group's share price fell 4.5% today, though it has doubled over the past year. Woodside Petroleum said it will withdraw from the underdeveloped Kitimat LNG venture in Western Canada at a cost of $77 million. The acquisition hasn't worked out for Woodside, and the decision is part of new CEO Meg O'Neill's efforts to clean out the business. Its share price rose 2%. In economic news, the Reserve Bank board minutes were released. The board was relatively relaxed about price rises, even if there's a spike this quarter because of strong demand for steel in China and supply chain disruptions. Underlying inflation was expected to increase from 1.5% over this year to close to 2% by mid-2023. Otherwise, the minutes were pretty much as expected. The local and global economies are recovering better than expected, but there remains many unknowns out there. The Aussie dollar is trading at 78.1 US cents. It's been in that 76 to 78 cent range all of this year. Undoubtedly, the Reserve Bank wouldn't mind it going a bit lower, but with commodity prices as high as they are, that's unlikely in the near term. That's it for the afternoon market report for Tuesday, the 18th of May, 2021. Join me tomorrow morning for the regular edition of the Fear and Greed Business Headlines. I'm Sean Aylmer. Enjoy your evening.